Good afternoon. Welcome to the Heritage Foundation and our Lewis Lehrman Auditorium. We welcome, of course, those who join us on our heritage.org website on all of these occasions and those joining us on the C-SPAN network. We remind our internet and television viewers that questions or comments can be sent to us at any time, simply emailing speaker@heritage.org. We will, of course, post the program on the Heritage homepage for everyone's future reference. And for those in-house, we do appreciate the courtesy of cell phones being silenced as we prepare to begin. Hosting our program and introducing our special guest is Ambassador Terry Miller. Ambassador Miller is our Mark A. Kolokotronis Fellow in Economic Freedom. He is also Director of the Center for Data Analysis and Center for Trade and Economics. He directs all of our ongoing research in the role of free markets and trade in fostering economic growth here and around the world. He previously served in the Bush administration as the ambassador to the United Nations Economic and Social Council, appointed in 2006. He has a long and distinguished career as a diplomat and public servant. Please join me in welcoming Ambassador Terry Miller. Terry?
Thank you, John, and let me add my welcome this afternoon to the Heritage Foundation. Social Security's disability insurance program was established in the 1950s. Like much of our federal government's social safety net, the disability insurance program was founded with noble intentions to ensure that Americans who could not work because of mental or physical impairment would not suffer from poverty or destitution. However, over its nearly 60 years of existence, the disability insurance program has morphed from a small-scale anti-poverty program, providing benefits to less than 0.5% of our population, to a program that now provides not only disability insurance, but also unemployment and early retirement subsidies to over 5% of our population. 5%. Well, rather than deal with the manifest problems in the disability program, ranging from biased eligibility processes to outright fraud, Congress chose in its recent budget deal to go with a short-term financial patch. They bailed out the program with $150 billion from the even more underfunded Social Security Trust Fund. Kicking the can down the road seems to be the best we can do under the current administration in the face of an entitlement funding problem that threatens to overwhelm our government's financial stability. Despite the infusion of cash, the disability program will run out of money in 2022. With the Social Security program itself creeping closer to insolvency, it's hard to see where the money will come from then for yet another bailout. Our guest, Senator Tom Cotton, was one of the heroes who voted against that reckless budget fix. And he's here today to talk about some of the real reforms that could improve the efficiency and integrity of the disability insurance program. Tom Cotton grew up on his family's cattle farm in Yell County, Arkansas. He went from Dardanelle High School to Harvard and then on to Harvard Law School. After a clerkship with the U.S. Court of Appeals and private law practice, Tom left the law because of the September 11th attacks. He left to join the U.S. Army. Tom served in Iraq with the 101st Airborne and Afghanistan with the Provincial Reconstruction Team. Between his two combat tours, he served with the Old Guard at Arlington National Cemetery. Tom's military decorations include the Bronze Star. Between the Army and the Senate, Tom worked for McKinsey & Company and served one term in the U.S. House of Representatives. Tom and his wife, Anna, had their first child this past spring. Congratulations, Senator. Please join me in welcoming Senator Tom Cotton.
Thank you. Thank you very much for letting me participate today in Ambassador Miller, thank you for the very kind introduction. It's a privilege, as always, to speak at the Heritage Foundation, especially before this distinguished panel. Rachel Gressler and Romina Bacha, your work at Heritage has been instrumental in the cause of Social Security disability reform. Both staffers and legislators, as you probably know, rely on your analyses. And when disability reform does eventually come, your great work will have advanced the cause significantly. And Kim Hildredge, your work on transitional benefits was a critical component of my own legislation, to which I will turn shortly. We all know the challenges of the Social Security Disability Insurance Program. It's grown far too large, well past the rate of demographics. There's a lack of program integrity, and those who should recover never leave the program. But I want to highlight today two other specific concerns with Social Security disability. First, the effect of Social Security disability on communities, what might be called the disability tipping point. And second, on ways to better help those who can recover return to work. A dynamic of the disability program that's sometimes underappreciated is just how regional and concentrated it's become. In Arkansas, we have the third highest rate of Social Security disability usage, only behind West Virginia and Alabama. About 7.5% of the working age population in my state collects disability benefits. By contrast, the Dakotas, Nebraska, and Wyoming all have about 3% of their working age population on disability, less than half of Arkansas's rate. And within Arkansas, the disparity is even more striking at the county level. Arkansas, along with the other states in what's been called Greater Appalachia, have counties where close to 20% of the population is on disability. That is an astonishing figure. 1 in 5 residents on disability in these places. That also means that disability is the largest source of income in those counties. On the other hand, other counties in Arkansas, particularly the fastest growing ones, have rates of disability well below the national average. The evidence is pretty clear. There's an inverse relationship between the rate of disability usage and population growth, which most economists would agree is a good proxy for economic vitality. Sadly, our 20 counties with the highest rates of Social Security disability suffered a population decline of more than 2% in the last 4 years alone, while the rest of my state grew by more than 2%. By contrast, the 20 counties in Arkansas with the lowest rates of Social Security disability usage have boomed, with population growth of more than 4% over the same time. This correlation is too striking to ignore. The same trend is also true nationwide. Buchanan County, Virginia, with 22% of the population on Social Security disability, had more than a 4% decline in its population in 4 years. McDowell, West Virginia, with a 21% rate of Social Security disability, saw more than an 8% decline in its population. The fastest growing counties in the country, in places like North Dakota, Texas, and Northern Virginia, by contrast, have less than 2% of their population on disability, or about 1/10 the rate of the declining population counties. It's hard to say what came first or caused the other, population decline or increased disability usage. Or maybe economic stagnation caused both. Regardless, there seems to be, at least at the county and regional level, something like a disability tipping point. When a county hits a certain level of disability usage, disability becomes a norm. It becomes an acceptable way of life and an alternative source of income to a good-paying, full-time job, as opposed to a last resort safety net program to deal with catastrophic injury and illness. After a certain point, when disability keeps climbing and becomes endemic, employers will struggle to find employees or begin or continue to move out of the area. Population continues to fall and a downward spiral kicks in, driving once thriving communities into further decline. Not only that, but once this kind of spiral begins, communities could begin to suffer other social plagues as well, such as heroin or meth addiction and associated crime. An urgent policy goal, therefore, should be to stop these tipping points from being reached. There's nothing compassionate about accepting these rates of disability usage. It's bad for the communities affected, and it's worse for the disability recipients. After all, they will receive poverty-level checks for the rest of their lives. Those who can work but are instead on disability will likely never again receive a paycheck, never enjoy working with others, making friends at work, developing new skills, and achieving the fulfillment that comes with the dignity of work. These tipping points, along with the general increase in the number of disability recipients, have also endangered the program's financial health. Including Medicare benefits for recipients, the program now costs more than $200 billion per year, or the equivalent of about half of all non-defense discretionary spending. In turn, the financial uncertainty around the disability programs puts at risk the genuinely and permanently disabled who depend on the program. I'm introducing legislation to address this challenge. It will have three main parts. First, Social Security will distinguish between those who are genuinely and permanently disabled and those who are disabled but expected to recover. Today, the system treats a paraplegic the same as someone with a severely broken leg who's expected to recover in a year. Those who are expected to recover will be categorized as likely or potential to recover. Second, it will allow beneficiaries in these categories to earn an income while on the program through a benefit offset. These beneficiaries can take time for rehabilitation and then gradually rejoin the workforce. With the offset, they won't be at risk of losing their benefits as they begin to earn more money on the path back to full-time work. Further, this offset can improve the program's integrity because judges can review whether a beneficiary used the offset if the beneficiary reapplies to the program for permanent disability status. Third, my legislation will also set timelines for these individuals to exit the program and return to work. If their recovery goes more slowly than expected and they're not yet ready to return to work, they can reapply. But if they're no longer disabled, we must help them leave the program and return to the workforce. The past years have shown that this approach is necessary if we want to increase the number of beneficiaries returning to the workforce. Social Security's Ticket to Work program, for instance, has operated for more than 16 years. There are also dozens of other resources available to beneficiaries from countless federal agencies. Yet, after billions of dollars of studies, pilots, and other programs, the return to work rate has dropped to nearly zero. I believe that our challenge isn't a lack of good intentions or a lack of federal programs. Our challenge is a lack of expectations and a lack of incentives for those who can recover. My legislation attempts to fix this. These reforms won't solve all the problems of Social Security disability, but they will address one of the most urgent crises in the program and the one perhaps most corrosive to affected communities. Thank you all for your interest in this issue, for your outstanding work on the topic, and for allowing me to address you today. Now we will turn to the real experts on the panel. Thank you.
Thank you so much, Senator Cotton. I would ask the panelists please now to join us. To continue the discussion right now, we're joined by a very distinguished group who I'm going to introduce as soon as I can find my notes. We have three speakers today who will discuss their proposals for transitional benefits for disabled individuals who might return to work, as Senator Cotton talked about. Also for a private disability insurance option to increase the scope of the program, and a flat disability insurance benefit to make it more sustainable and more fair for those who are lower income to start with. Our first speaker will be Romina Boccia. She's the Deputy Director of the Thomas A. Rowe Institute for Economic Policy Studies and the Grover M. Herman Research Fellow at the Heritage Foundation. Romina focuses on federal spending and the national debt, including Social Security and disability insurance. Prior to joining the Heritage Foundation, Romina served as an associate at the Charles Koch Institute and as a policy analyst at the Independent Women's Forum. Kim Hildred currently serves as president of Hildred Consulting. Prior to her current role, Kim served for 17 years as the staff director of the Committee on Ways and Means Subcommittee on Social Security. There she assisted committee Republicans in the development and passage of legislation to strengthen Social Security, retirement survivors, and disability programs, as well as in the oversight of these programs. Her prior service also includes 3 years deciding Social Security disability claims for the states of Kansas and Wisconsin, followed by 10 years of increasingly responsible positions in managing Social Security disability programs in the Chicago and Philadelphia regions. And our final panelist is Rachel Gressler. She's a senior policy analyst in economics and entitlements in the Center for Data Analysis at the Heritage Foundation. In her current role, Rachel focuses on Social Security, disability insurance, tax, and pension policies. Prior to joining the Heritage Foundation, Rachel spent 7 years as a senior economist on the staff of the Joint Economic Committee, where she focused on similar issues. So let's start with Romina.
Thank you, Terry. The bipartisan budget deal that passed last week did one thing right. It prevented automatic benefit cuts for disability beneficiaries. But it failed to make substantial reforms to make the program work better for the beneficiaries that it serves and also for the taxpayers who fund it. It only included very minor changes to deter fraud and reduce overpayments in the disability program. Beyond that, it only included one demonstration project to test out a reform proposal that some believe will increase work participation among disability program beneficiaries. My remarks today will explore this demonstration project in greater depth, and in particular, I will try to answer the following questions. Is this policy change so promising that it was worth Congress putting all of its eggs into that one basket in the budget deal? And among all of the policy options available for which Congress could have authorized demonstration projects, was this the best one that Congress could have chosen? And the answer to both of these is a flat-out no. Demonstration projects exist to test and measure the effect of potential program changes. I'm sorry to tell you, but the demonstration project that Congress chose is among the least promising. That is, if we're trying to accomplish, if what we're trying to accomplish is to focus the program on those who need it the most and to reduce program costs as we do that. The demonstration project authorizes another variant of a so-called benefit offset policy. The idea behind it is to let disability beneficiaries work more without losing their benefits. This policy will likely increase entry into the disability program by individuals who can do some work, and it will discourage those already on the program from leaving the rolls. That is, if that is the only change that's adopted. Now, one might say, hey, let's not fault them, maybe it will work. The thing is that this proposal has been tried in different variations here in the US and in other nations, because the US is not alone in struggling under the weight of growing disability program spending and also the accompanying reduction in labor force participation that occurs when individuals leave the labor market to join the disability rolls. Most people agree that society does have a proper role in providing benefits for those who cannot provide for themselves. However, poor program design in the disability program ends up discouraging labor force participation among individuals who might otherwise work, and this is what program reforms should effectively address. Now, before I get into details, I'd like to draw your attention to a story in this Sunday's Washington Post about a young man named Paul that illustrates this problem very effectively. Are we able to pull up the slide? Anyways, you can always find it online in the post as well. Paul is 34. And in the picture in the post, he's shown with his rock climbing gear. And I've actually seen Paul at the rock climbing gym where I go as well. And the story is about Paul, who used to work at the outdoor outfitter REI for about 5 years. But he lost his health insurance coverage when his hours got cut back. Now, Paul has a rare condition that requires him to take costly endocrine system drugs to manage his condition. So the Post writes about Paul, and I quote here, "So instead of going out and trying to support himself with another job, Paul took the safer option, applying for Social Security, disability insurance, and Medicaid." Now, in order to qualify for disability benefits, applicants are required to prove that they are unable to earn more than $1,100 a month from working. This earnings test is called the Substantial Gainful Activity Level. The story in the Post goes on to describe how Paul, shortly after being admitted to the disability program, got another job offer in DC that would have paid him enough to get him over that earnings test threshold. But then he risked losing his free medical and government cash benefits. So I was very saddened yesterday as I was having my Sunday coffee to read about a young man who is holding back his professional career so he can maintain valuable disability benefits. This is a human tragedy. It is a tragedy of lost potential. Some analysts have suggested that lawmakers should eliminate the earnings test or smooth out this benefits cash cliff by allowing individuals to work indefinitely for higher earnings while maintaining their disability benefits. Because there are already a lot of programs on the books that allow individuals to test out their ability to work at these higher levels, but over time, individuals are expected to leave the roles. Some analysts say that this is discouraging individuals from even trying to earn at higher levels. Now, fiscal conservatives who are proponents of this policy believe that more individuals like Paul might, once they earned substantial amounts above this earnings threshold, leave the roles. They're hopeful that this might reduce costs over time. And the smoothing out is called a benefit offset policy, and the budget deal includes one variation of it. But existing research suggests that a benefit offset would likely increase program costs by encouraging more individuals like Paul, who have marginal work capacity, to enter the disability program. It is effectively a benefit expansion, and it would also discourage others from leaving the roles. A national benefit offset program is, on the other hand, expected to increase the earnings and disposable income of disability beneficiaries while increasing program costs at the same time as the program expands beyond its statutorily targeted population, which is individuals who are unable to work at those levels of income. The Social Security Administration began a similar demonstration project as was authorized in this recent budget deal in 2009, and the researchers evaluating the program concluded that adopting this as a national policy would most likely increase program costs. A benefit offset policy encourages people like Paul to accept higher earning positions or to work more hours. By itself is inadequate to fix the problems in the Social Security program. It might increase some labor force participation among those already on the rolls, but it's unlikely to reduce the number of individuals who are on the rolls if this is the only policy change that Congress were to adopt. Now, in combination with other reforms that are more likely to result in program savings and effectively return people to work, a benefit offset can improve the welfare of individuals with disabilities. And I was very encouraged to hear Senator Cotton speak about just such a proposal. Because one of the big issues with current program design is that it sets no clear expectation that individuals with marginal or temporary disabilities return to work. And by returning to work, I don't mean increased labor force participation by those who are on the disability rolls, but supporting yourself through work. Other nations, notably Germany, which is where I'm from, Norway, and the UK, have built-in incentives for individuals to return to work through focus on accommodations and by time-limiting benefits for certain populations. In 2014, then Senator Tom Coburn introduced a bill that would have granted time-limited benefits when recovery is expected for those on the rolls, and I'm glad to hear that Senator Cotton is picking up that mantle. This bill would also have established pilot projects to test early intervention efforts to help work-capable individuals like Paul with disabilities to return to work before ever entering the disability program. And I look forward to hearing from my colleagues more about some of those promising reforms.
Thank you, Romina. Kim?
Okay. Good afternoon, everyone. And thank you for the invitation to be here today. This presentation is going to summarize our paper, which was entitled The Transitional Benefits for a Subset of the Social Security Disability Insurance Population. I want to acknowledge my co-authors, Pam Mazursky, Dean Harold Krent, and Dr. Jennifer Christian. And this paper was actually submitted as a proposal to the SSDI Solutions Initiative that's co-chaired by former chairman of the subcommittee, Jim McCreary, and Earl Pomeroy. And so we were delighted to be able to submit this paper for that initiative. So, to start, our paper addresses essentially a small subset of new beneficiaries who the Social Security Administration currently identifies as expected to medically improve after a benefit award is made. Today, there are about 3% of beneficiaries that are expected to medically improve. Examples of medical improvement include those in a catastrophic accident or who had major thoracic surgery, abdominal or reconstructive musculoskeletal surgeries. In other words, those with impairments arising out of conditions that respond well to medical and or rehabilitative treatment. These beneficiaries today are not provided with medical supports or employment services that would facilitate their return to work. And should their benefits be ceased through a continuing disability review as well, nor are they required to pursue rehabilitative or medical services to facilitate return to work upon their benefit award. In contrast, when Congress first considered adding a disability insurance component to the Social Security program, many contemplated a system of transitional benefits coupled with vocational services designed to help people get back onto their feet and into the workforce. So essentially, our paper encourages lawmakers to revisit the link between rehabilitation services and disability and consider creating transitional benefits for the small subset of new beneficiaries whose disability is not in question, but who have conditions expected to improve. The Social Security Administration would administer a compassionate system of transitional benefits with employment supports, with the goal of employment, financial independence, and better quality of life. So as I mentioned in terms of the problem, beneficiaries with conditions that are expected to improve are not encouraged to work, nor are they provided with employment supports they need to return to work. Continuing disability review backlogs, which had reached 1.3 million by the end of fiscal year 2013, harm beneficiaries, according to a report by the Bipartisan Social Security Advisory Board. And this happens by delaying return to work efforts, which become more difficult with time, potentially creating a misimpression that eligibility is permanent regardless of disability status, and preventing the Social Security Administration from taking timely action to discontinue payments to beneficiaries who are no longer eligible, causing a misuse of program resources. Beyond backlogs, there are other problems facing the continuing disability review process. If the decision supporting the initial disability finding is vague, decision makers may not be able to determine medical improvement. In addition, beneficiaries face significant problems, employment challenges, given the length of time that they wait for an award, in addition to the length of time before a continuing disability review occurs. And should they be ceased when a continuing disability review occurs, they are not offered services to help them re-enter the labor market. Our paper also references experts who have highlighted the need for beneficiaries to receive assistance to return them to employment and the value of work, and the increasing number of OECD countries that have implemented time-limited or temporary payments. So briefly, our proposal for transitional benefits would change the dynamic of disability by ensuring that beneficiaries have access to supports and services that will aid them in medical and work recovery, sending a clear message through a fixed-length benefit award that temporary financial support is needed while the beneficiary is recuperating, while also signaling the expectation that they will be returning to work. Allowing transitional beneficiaries to earn income without limits during the benefit period, and finally, maintaining the beneficiary's ability to file a new application at the end of the transitional benefit period should they still believe they are unable to work. So under the proposal, disability determination services examiners, these DDSs are 100% federally funded state agencies who make those disability decisions at the initial and reconsideration level. And administrative law judges would first determine, as they do now, whether the claimant meets the statutory definition of disability. Decision makers would use a newly developed predictive analytics model to determine whether the medical condition is expected to improve. If so, transitional benefits would be awarded for a 2 or 3 year period specified by the predictive model, with the decision maker having the ability and discretion to expand the traditional period of up to the maximum 3-year traditional term. As soon as practicable, contact information of individuals receiving transitional benefits would be sent to their local community work incentive coordinators under the current law Work Incentive Planning and Assistance Program, which would be modified to prioritize services to transitional beneficiaries, including a direct referral to a Ticket to Work service provider. Under a modified Ticket to Work program, and as the Senator mentioned, that's a current law program under the Social Security Administration, service providers will provide customized services to increase medical or functional recovery if necessary in order to achieve employment. And as mentioned previously, there will be no cap on earned income during the transitional benefit period to encourage work. Okay. So, the paper further addresses a number of implementation issues. Regarding the use of predictive modeling, it points to SSA's experience with predictive modeling in the continuing disability review process, determining which matured diary cases should undergo a full medical review. It also points to SSA's needs to update the guidelines to determine these diary assignments. The instructions for the examiners who set the diaries for when people will have a continuing disability review, they have not been updated since the 1990s. So we point to the need for that to happen. And finally, that an expert panel would be convened periodically to update the medical criteria used by SSA decision makers to determine medical improvement. Regarding appeals, we propose making the decision to award transitional benefits non-appealable to avoid undercutting the goal of encouraging beneficiaries to take the steps needed to re-enter the workforce instead of waiting for the appeals process to unfold. And we point to examples where Congress has precluded appeals in analogous contexts in the past. And as to supports, we provide further details regarding the expedited and tailored services, again, through existing return to work programs, and the study regarding amending the Rehabilitation Act. As to required compliance, transitional beneficiaries would also be required to follow prescribed treatment and take advantage of return to work services if needed to facilitate a workforce reattachment. SSA would also be required to notify transitional beneficiaries 6 months in advance of their benefits ending so that they may take any needed action. There we go. The paper also required that we would, all of the authors were asked to specify statutory changes that would be needed under the proposal. And so we included a list of those statutory changes as illustrated here. Oops, I think I jumped ahead. There I am. Okay. So you can see that those are just spelling out some of the changes that would be required. And also asked us to identify some potential intermediate steps that could be utilized by lawmakers. So the paper includes certain intermediate steps, for example, a study to analyze the CDR process to provide baseline data to inform a well-designed transitional benefit program, a congressionally authorized testing of all elements of the transitional benefit program through a pilot in a few states or a region, which could be expanded if preliminary results are positive. And the paper also includes options for demonstration projects through federal interagency agreements or state innovation or experimentation with state VR, DDS, and employment network partners. And that could potentially be funded by nonprofit foundations or through social impact bonds. Finally, we were asked to address some of the questions or concerns that people may have about the proposal in the paper, and including those, for example, who may just simply oppose the concept of time-limiting benefits. And while we believe that establishing transitional benefits for this small subset of beneficiaries whose conditions are expected to improve, combined with the employment support services, is not only a compassionate solution that better serves these individuals, but is also consistent with Congress's intention that some disabilities would be temporary, since the definition of disability does specify that the disability must last for a continuous period of at least 12 months. And we defend also the use of predictive analytics as a probabilistic approach that would ensure more consistent outcomes nationally. And the senator spoke to some of the inconsistencies that we see across the nation. We acknowledge that the transitional disability concept would impose greater administrative burdens as more applications might be processed due to those transitional beneficiaries who believe they might still be disabled. However, we explain why we believe these burdens would be manageable. And although the costs are somewhat speculative, we explain why we believe the increasing administrative costs could be eclipsed by the long-term savings to the trust fund. And we also discuss why additional funding would not solve the issues addressed by this paper, including the fact that the transitional term, unlike the uncertain prospect of a CDR, reinforces the fact that beneficiaries should be able to return to work and provide supports that enable them to do so. So in conclusion, the average SSDI benefit is $13,980 a year, only slightly higher than what constitutes the poverty threshold for an individual living alone. We believe individuals with disabilities deserve better outcomes that are consistent with the Americans with Disabilities Act, namely the inclusion of individuals living with disabilities in all aspects of life, particularly employment. Studies by Mathematica have indicated that age, health, and time on the rolls are characteristics associated with beneficiary work-related activity and employment success. And we believe that limiting time on the rolls for a small subset of these beneficiaries who have a high likelihood of medical improvement, coupled with supports and services aimed at improving health and increasing employment reentry, will facilitate better economic outcomes and overall improved quality of life. Thank you.
Thank you, Kim. Rachel?
I'm going to discuss two big picture reforms here. The first is an optional private disability component within the current SSDI system, and the second is a flat benefit. I'm going to start with three statistics. There are over 20 million working age people with disabilities in the United States today. About 11 million people are on the disability insurance rolls. And yet 75% of people with disabilities, that 20 million figure, would like to be working in some capacity, but very few of them are. Only 30% are employed. So what this says is that there are actually more people with disabilities than are currently on the system, but yet there are more people overall that want to be working and that aren't able to. And so a lot of those who are receiving SSDI benefits would like to work, but they're not able to, and the current system is impeding them from doing so. This first chart here shows the percent of the population, the working age population, that has been on SSDI since its inception in 1956. It started at less than 0.5% of the population, and now we're at over 5% of all people working age receiving it. So why are so many people receiving benefits when we see that life expectancies are increasing? There's medical innovations that are allowing more people to recover from whatever disability they have to get back into the workforce. There are workplace accommodations. And our jobs are also a lot more sedentary than they used to be. It's not that there's a bunch of manufacturing and physical labor jobs, but there are a lot of jobs that can be found today that only require minimal work or minimal physical effort. So why have the roles been increasing despite that? A study by the Federal Reserve looked at the change in beneficiaries between 1980 and 2013. They were able to account for about half of that rise in the rolls. They attributed that rise to three factors. First, there was an increase in Social Security's retirement age, and so people ages 65 to 67 will now be on disability as opposed to Social Security if they become disabled at that age. Second, there's the aging of the population. The baby boomers are reaching older ages where they're more likely to become disabled. And third, we've seen a rapid rise in women's labor force participation. So whereas they were not eligible for SSDI before, they are now. Yet that leaves about half of the rise, which is equivalent to 3 million people per year, or $42 billion in spending, that's unaccounted for. Now, there are a lot of problems within the SSDI system, but we can kind of categorize them into two things. First, there are too many people that are getting on the rolls to begin with. And second, too few people are ever leaving the rolls. The proposal that I'm suggesting here is an optional private insurance system. This would address both of those components. Private disability insurance exists today for about 1/3 of workers. Now, it's a totally different structure than the SSDI system. It's the same product, it's disability insurance, but the incentives are entirely different, and they're entirely different because of the financial incentives that are there. Private disability insurance has to provide a product that employers and disabled individuals appreciate and that is valuable to them, but they also have to provide it at a low cost. And they do that through a very efficient and effective determination process. As you can see on this first chart here, the average wait time for that initial decision from a private disability insurance provider is 41 days. Almost nobody goes beyond the initial decision. It's not like SSDI where everybody appeals. So most people have that decision within 41 days. In that time period, they're assigned a caseworker who is meeting with the individual, who is asking who is the individual's doctor, meeting with them if needed, meeting with the employer, and trying to figure out what kind of medical help do they need, what type of workplace accommodation would allow them to get back to the job, or do they need a different education because they can no longer perform the job they were doing before. Now, on the other hand, the Social Security system, individuals sit and wait for 5 months without working before they can apply to receive benefits. After that, they go to the initial level, the DDS level, where they wait about 100 days for an initial determination. Most people are denied at that stage, and then they go on to appeal it to an administrative law judge. That whole process takes 556 days on average. During that time, individuals are losing whatever link they had to the workforce, they're losing their skills and their education, and they're beginning to believe that they really cannot work. The second component of the private disability that is more effective and efficient is the determination process. This second graph just kind of gives one glimpse of that. We've seen in the SSDI system that now 63% of all claims that are approved are for mental and musculoskeletal disorders. Now, those are legitimate disorders, but they're also the more subjective ones that are harder to diagnose. On the other hand, in the private market, you see that only 35% of those claims are for the muscular and mental disorders. So in addition to providing more workplace accommodations and having the goal of getting people back to work as opposed to just approving them because that's easier than denying, and continuing to pay benefits because that's easier than going through a CDR. As we heard, there are more than 1 million people waiting to have their CDRs. So in addition to that, the private market is not only providing higher benefits, but at a lower cost. The first chart here shows the level of benefit the individuals would receive by income level. So as you go to the right, that's higher income individuals. And the light blue bars represent what they would receive from SSDI currently. The dark blue bars are what they would receive from private disability insurance. SSDI replaces, on average, 44% of workers' income, whereas the private system typically replaces 60%. So it's providing higher benefits, and it's doing that at a much lower cost. Private DI costs about $245 per year on average, compared to about $867 per year that somebody making $50,000 would pay in SSDI taxes. It's hard to do an apples-to-apples comparison with these two because if an individual is on private disability and then they get on SSDI, there's an offset. But even after accounting for those things, I did an analysis that showed that the private market could continue to pay their 60% replacement rate for half the cost of what individuals are currently paying in payroll taxes. So the proposal here would be to allow employers, if they wanted to offer a qualified private disability insurance that would be at least equal to what SSDI provides now. Employers who choose to offer this would receive a payroll tax credit. A portion of the current 1.8%, 0.9 is on the employer themselves. They would receive that credit that would allow them the funds to purchase the private disability insurance. Individuals who have an employer that goes through this private system would first apply through the private system. They might still be in their job and having trouble, and they would be able to apply without having to sit there for 5 months and then wait another 500 or so days to get a determination. They would have access to all those return to work supports and rehabilitative efforts. And after the initial decision, they would, if they were determined to be disabled, they would receive those benefits for the first 2 to 3 years. And after that time, if they're still disabled, they would be transitioned to the SSDI system, because there's no reason to continue on the private system if at that point they've been determined to be continually disabled after 2 to 3 years. It's more efficient probably to let SSDI continue to pay their check, but we've had the benefit of that initial determination going through the more efficient private sector, the individual having support along the way, and all the efforts that try to get them back to work, and then when they're determined not able, they would transition over. This has the benefit to the individual who has more support along the way. It advantages the employer who could reduce their overall employment costs, and it's also an advantage to the SSDI system because the private employers, the payroll tax credit would be less than what it is costing SSDI itself to provide those benefits, and they would also have a reduction in their rolls as a result. The second proposal I'd like to talk about gets at the original intent of Social Security. As Terry said, this is a nearly 60-year-old program, and when it was originally set up, it was to ensure that people who become disabled are not destitute and living in poverty. And yet, as we see here, Social Security provides the largest benefits to the people who have the highest pre-disability incomes. The graph to the left there shows that somebody with the highest income would be receiving $2,800 per month in SSDI benefits, whereas a minimum wage worker is going to be receiving only $866 per month. As a result of this, we see that nearly 2 million people who receive SSDI benefits are living in poverty. That wasn't the intent of the program. It was to prevent poverty among the disabled. So those who are below poverty are either without enough income or they're turning to other government programs that are having an additional cost. If we were to implement an anti-poverty flat benefit equal for everybody who goes into the system, this would be an increase in benefits for about 35% of the population and a reduction for about 65%. Now, we wouldn't propose to change benefits for anybody currently on the rolls, but going forward, and this is something that actually could be implemented relatively quickly, those in the future would receive this flat benefit. The reason we could do this today, or start it a year from now, is that disability is not like Social Security where individuals plan to retire and they know they're going to need that money someday. Disability is an unplanned event. And so to the extent that an individual wants to ensure that they're going to have a certain level of income, if they become disabled, they can go out tomorrow and purchase disability insurance in the private market that will ensure that level of income. And this is getting at the proper role of the disability insurance system. It is that anti-poverty benefit, and anything beyond that is left up to individuals to decide, do I need 50% of my income? Do I need 100%? What is it that I need? And the government does not need to dictate that and set it at a certain percent, but the individuals can go out and purchase whatever additional amount they would need. In addition to restoring Social Security's disability insurance program to its original intent, this proposal would go beyond solving Social Security's shortfalls. Over the next 10 years, it would solve about 2/3 of the shortfall, and that's only because we would grandfather in anybody in the current system. The graph here shows the light blue lines are Social Security's shortfall in billions of dollars. The dark blue lines are the savings that would be accumulated as a result of implementing this flat benefit. As you can see, beginning in 2023, the savings exceed the shortfall. That is, you're going to have more money left over than the shortfall, and so we could take that money and you could reduce the payroll tax itself, give more money back to individuals, more after tax take-home pay would allow them to purchase disability and private disability insurance to bring them up to whatever level of income they believe they would need if they become disabled. So in short, these two proposals get at the two components. They address the problems that are inherent in the current system through that private option, and then they also look at returning Social Security to its original intent and bringing about the financial savings that we need to keep the program solvent. I think we'll turn to questions now.
Yeah. Thank you, Rachel. Now it's your turn. While you're formulating your questions, I'm going to start with one of my own, and that's just ask our panelists. They've described a situation, a program here that is manifestly broken in many ways. It has a terrible incentive structure. It provides inequitable benefits. The bureaucratic inefficiencies in running the program are terrible. It discourages people who are currently disabled from returning to work through punitive measures. As Senator Cotton said, it provides incentives that lure people into long-term dependency that effectively makes them wards of the state for their entire remaining lives. And we've heard some very innovative and it sounds like reasonable proposals for reforms to the program. And I would just ask our panelists briefly, what are the politics of this? Is this something that really is amenable to bipartisan action, or is this going to be another one of those failed debates in Washington where the two parties talk past each other and nothing actually ever gets done to fix what is clearly a broken program? Romina.
I'll take a first stab at this. I think to some degree the disability politics are very much interwoven with the Social Security politics in general, where one party stands on the position that no matter what, no benefit cuts, and then they define benefit cuts in all sorts of interesting ways. So many of these proposals that would return people to work, some people would say that this is a benefit cut, that they are due this benefit for the rest of their lives, and we should not put any time limits or anything that could potentially do any harm to individuals, even when what we're really trying to do is to help them be independent. The other issue, I think, is that disability is a much, much smaller program than the Social Security retirement program and is much less understood. It is highly complex. And many lawmakers don't understand it very well, and so they fear getting involved with the program. They might make a mistake. There are only a few that have shown leadership and willingness to learn about the program and really lead on these issues. With the reallocation of money from the Retirement Trust Fund to the Disability Trust Fund, it takes urgency to fix the issue in terms of legislative action off the table, but what we should now stress are the costs and potential benefits to the individuals currently in the program and those joining the rolls now if we were to make the program work better for these individuals and the taxpayer, and not rely on the next legislative opportunity, which will be 7 years down the road and could very likely not be seized either.
I think the recent budget deal just shows that this is a politically difficult topic. Lawmakers showed behind closed doors. They negotiated a few small changes and came out and said, look, we've done some things to solve Social Security, we're paying for it, but really all they did was kick the can down the road, steal the money from Social Security, and make both programs worse off in the long run. So while it looks like we have some time, the same thing is going to happen come 2022 when disability is running out of money again. And there's so far has not been the initiative to do any real reform on this, rather than to try and merge the two programs. And the further that we push them back, the more likely we to just see a tax increase and nothing that's going to change the problems that exist within it.
I would agree. The challenge is complexity, lack of urgency now with the new budget deal. It's passed for sure. And there is not there's not a coming together of parties or even constituents to try to tackle some of these very difficult challenges that the program faced, not only in terms of long-term, having benefits, full benefits be paid, but also in terms of, one of the other challenges that we have is the statute really is really doesn't say very much in terms of defining disability. A huge amount of responsibility is placed on the Social Security Administration to develop the supporting policies, to update the policies, and really to maintain the program. And, as we know, that's particularly challenging for the Social Security Administration. So you have all of these competing factors, I think, that really make for this cocktail that ultimately, in my view, hurts people with disabilities.
Thank you. Questions from the audience? One right here. If you could just wait for the microphone, and then please just identify yourself and then state your question. Do we have a microphone down here in the front? Thank you, Esther. This gentleman right here.
Yeah, I wondered if you could talk about Senator Cotton, his proposal, and why lawmakers are so hesitant to take positions on this type of issue.
Thank you. Alice?
Kim, you probably know it best.
Well, I think what we know essentially is the description that the senator just gave today. It's not been introduced yet, so we don't have the details of the proposal. So his commentary, I think, really speaks for itself in terms of the kinds of principles that he has. And so we'll see when the legislation is actually proposed. But I think another challenge, it's very difficult. Rarely do you find true leadership in terms of members of Congress who really want to stake out a claim for this position. Oftentimes, some of the individuals receiving benefits and their advocates can be very resistant, as my fellow panelists said. They can be resistant to change and be very afraid of change. So it can be a very scary thing. Any changes to them, and that also makes our representatives and our senators a little bit hesitant to take on these very complex, very big challenges. At the end of the day, I think if members can find bipartisan partners, I think that will also help tremendously. And I think we're starting to see a little bit more of that behind the scenes. This budget deal was probably one example of more minimalist approach, certainly, but I think all of this discussion is helpful to helping the members understand the challenges the program faces, and maybe we might see some of them working together.
I think another challenge is also historical experience. Congress did phase in reforms in the 1980s that strengthened a continuing disability review process, and the Social Security Administration was encouraged to identify more individuals who were no longer eligible to receive those cash benefits, and their cash benefits were terminated. And there was huge backlash, and Congress received many, many, many phone calls from constituents who had been relying on those benefits even if their medical condition made them no longer eligible, but they had no other sources of income. And when you've got a constituent calling saying that they can't pay their mortgage anymore, that has a certain impact on a member of Congress. And I think that has a lot to do with it as well. How many other economic opportunities are there for these individuals? And this is, I think, one of the issues, that the program does act for too many individuals as a long-term unemployment or early retirement program. And there are lots of incentives in the program that should be changed to not abuse the program in that way, because in the end, a benefit that goes to someone who is not truly eligible that's money that's not available for an individual who truly cannot work.
And I think these proposals, the transitional benefit and telling certain people that they are expected to return to work, it incites fear in those who are on the rolls now. I've had phone calls of people that say, I read this, I'm terrified, are they going to up my review, and are they going to come and take my benefits away? But that's a result of the current system. That's when I was talking about 5 months of waiting before you can apply, and then another 2 years before you get benefits, and then you sit on the rolls for a couple years. By that point, individuals believe they are disabled and that they cannot do any work. If you start at the beginning with a transitional benefit and you say, here's the system you go through, and it looks more like a private disability insurer where they're working with the doctors, they're seeing what kind of workplace supports you can have, what type of medical corrections might allow people to perform jobs or a new type of job through education and training. That's an entirely different system, and there doesn't need to be the fear in that system because people are there working with them along the way and showing them how they can get back to work, as opposed to just receiving a phone call one day and saying, hey, you're done, your benefits are up. So if we can shift to that structure, there doesn't need to be the fear there.
Yeah, and of course, one of the major issues is that when you face a long-term fiscal overhang like we do in this disability program or also in the Social Security system overall, you can make rather modest reforms now and fix the problem of the system and the deafness that has afflicted us all. You can make rather modest reforms now, or you can make very radical and punitive reforms later. And so it's very distressing when the Congress just kicks the can down the road and just opts in effect to do nothing for the next 7 years. That to me seems like a very strong abdication of responsibility. We have a question in the back.
James Sharp from the Heritage Foundation. Question for you, Kim. You said that about 3% of the current SSDI recipients are as currently categorized expected to have medical improvement. And you also proposed, among other reforms, overhauling how they perform that classification. What do you think the percentage would be at the end of that overhaul of how they classify people are expected to make improvement?
You know, it's difficult to tell because the combination of the criteria not being updated for examiners to make the right decisions. We also know that the quality review is very limited of these decisions, if any. So essentially, unless an individual is clearly expected to medically improve, those are the kinds of people that the examiners are going to give that diary type of category. Everyone else, there's a medical improvement not expected. Those get a 7-year diary, and then there's a very large cohort in the middle that's called medical improvement possible. So one of the reasons too why we believe that the predictive analytics is particularly important is that predictive analytics will use the data itself to really show what are the types of impairments that really do result in medical improvement, and those predictive analytics, continue to use the data on an ongoing basis to ensure that not only do we have a process that's much more accurate in terms of diaries, but also a process that's much more fair and consistent across the country. Because we've seen some of the challenges that the program has faced, especially when, as my colleagues have said, there's a lot of judgment in certain types of impairments when one is establishing their functional capacity, their capacity that they still may have even with their disability. Those functional capacities are determined by individual examiners, they're determined by administrative law judges. In the examiners, they may have feedback from a physician, they may not. So there really is a lot of subjectivity there. So I think the more that we can have the data and the actual experience of individuals to drive the accuracy of those diary designations, I think definitely we would see a larger population expected to medically improve. But make no mistake about it, the program really is an important program for those who are not expected to, live a long period of time because of their very severe impairments. So we're talking about those who do have those conditions that are expected to improve, and what are the kinds of supports that they're getting. Right now, they're getting nothing under the current program. Most often, their continuing disability reviews are delayed, and then all of a sudden they get a letter saying, guess what, now we're going to review your claim. They've had no supports up to that point, and if they're ceased, they're provided no supports at that moment. And we don't believe that that's very compassionate.
And I think we have time for one more question. So right here in the front. Okay, we have time for 2 more questions. We'll start here in the front, and then we'll come back to you.
Elliot Young with the Institute to Reduce Spending. So just a question for our panelists. Given what we've seen with the recent efforts to replenish the Highway Trust Fund and the sort of political machinations around that, and how people talk about tax increases versus trying to find ways to reallocate spending, how do you see sort of a long-term effort to smooth out changes in SSDI? Because I feel like there are a lot of similarities between the sort of concentrated benefits and dispersed costs of just instituting another tax increase that might be more politically salient, even if that's not something that's best in the long term. How do you see this playing out? And what are ways that we can perhaps put something on our representatives, sort of light that fire that might push them towards doing the right thing rather than the easy thing?
Romina, you want to take that one?
The longer we wait, the more likely it will be some sort of tax increase fix, because you're just going to get to a point where the shortfall is imminent, and any policy reforms that you can possibly adopt, unless you're willing to cut benefits abruptly and steeply, which seems very unfair and nobody really wants to do, you're going to have to raise taxes or take the money from somewhere else. Right now, the money is being taken from somewhere else, but in the end, you could see it as just another portion of the tax increase that is to come. Because if you're thinking about the last reform effort in Social Security, that was in the 80s, there was a massive tax increase, and then there were some small reforms. Small reforms that in today's environment I would actually consider big reforms, like raising the retirement age, reducing incentives for early retirement and a disability program, that probably are small reforms considering the vastness of the problem, but since we haven't really had any reform at all, in today's context, these would be big reforms. So we need leadership in the Congress. Presidential leadership can do a lot on those kinds of programs. Beyond that, with no legislative urgency, I don't see how we are going to get all the interests to come together. You sort of have to face a worse scenario in order to agree to changes that will ultimately make us better off.
On the positive side, I would just point to the administrative changes. As Kim mentioned, a lot of the decisions and the way that this program is structured and functions is determined by SSA, and there are a lot of things that can be done there to increase the efficiency of it, to appropriately determine who is disabled, who is still disabled, and that would really go a long way in reducing the costs.
I would just add that I think a very fundamental question is Social Security essentially is self-financed. Workers pay taxes to get disability benefits, survivor benefits, retirement eventually. So the question is Social Security in the future going to remain simply self-financed, or are there other outside income like general revenues, for example? I'm not suggesting that at all, but I mean, these are some of the very clear choices that members are going to have to really think about, especially given the challenges of Medicare, the challenges of tax reform. I mean, these are very large questions that really face them and face the American people. So I think that's a very important kind of first question. And everyone pays into Social Security, everybody gets something out of it. How about if people start getting less and less out of it? Then are we going to continue to have public support for the programs? These are tough, tough questions, but they're questions that are going to have to be answered. And quite honestly, as we've said, the sooner the better.
Thank you. And now for the final question.
Well, I just didn't know if anyone could speak to what the senator mentioned about the regional usage of the benefits. Is there a reason for that, or? I just thought that was an interesting point, but I didn't know if there was a cause.
Mm-hmm. She's asking about the difference in the regional usage of disability insurance benefits. I'm not an expert on that, but I've looked at some of the statistics and just seen the percentage of people with disabilities who are employed, and it ranges from over 50% in the Dakotas to 25% in places like Louisiana and West Virginia. And I think part of that is cultural in the communities that develop, and oftentimes when a parent is on disability insurance, they can get a child on SSI or get child DI benefits. And my guess is that a lot of the cause of that is just the community within which they live, and people see that others are able to get on SSDI benefits and how they're able to get on them, and it just encourages that.
It can also be a signal that there is fraud going on. That has certainly happened in some communities where lawyers, disability lawyers, have partnered up with physicians, and there have been kickbacks, and doing that kind of statistical analysis sometimes can reveal these sorts of fraud schemes. But I think a lot of it is also what other economic opportunities are available in this community. And when there are few, then disability becomes a substitute for earned income.
Just briefly, the Congress, in the law, in the statute, in order to determine disability, one has to consider age, education, and work experience. How those are implemented by the Social Security Administration is through these so-called medical vocational rules. These rules have been in effect since the 70s. Efforts to update them have not been successful in the past. Social Security has embarked on an effort to begin that updating process. But that's a piece of the Social Security program that's out there that can cause, differences in award rates depending upon, again, age, education, work experience of individuals. And so, it's always important to try to keep those rules as current as possible. So.
Thank you very much. Please join me in thanking our panel for the discussion today.